furnishing the account record, broker-dealers must make sure that for each account with a natural person as a customer, there is a record indicating, okay, so customer account records, that's all that information that we just talked about. The record must indicate that the broker-dealer furnished to each customer or owner within 30 days of opening the account, and thereafter, every 36 months, a copy of the account record. So think about this. This is all of the information about the customer. Could it be that they have the information wrong? It could be. So they give you the information within 30 days of when the account was opened. Okay? So given account record given to customer within 30 days of opening. And then they're required, the broker-dealer is required to give it out, and again, no less frequently than every 3 years, every 36 months. The member may choose to exclude any tax ID numbers and the date of birth from the forms that they give you, which would make sense because what if the email was intercepted or the mail was intercepted? So they oftentimes will not have your tax ID number and your birthday on there. The member broker-dealer shall include with the account record provided to each customer an explanation of any terms related to investment objective. It should remind the customer to look this over, mark any corrections, and return it. For each account record that is updated to reflect a change in the name or address of the customer, the member, broker, or dealer must furnish a notification of that change to the customer's old address. Have you ever done that? If you have a brokerage account and you move, so gosh, I've moved like 16 times in my 18-year marriage, so I've gotten a lot of these. So I changed my mutual fund account address, and then they send the notification of the address change to my old address, which then of course gets forwarded to my new address. So they're required by law to send it to the old address. When are they required to send this out? On or before the 30th day after they receive notification of the change. And usually they just do it right away, but they have 30 days. Anytime the customer changes their investment objective, the broker-dealer must send out an updated customer account record also within 30 days. Each customer must be provided with a copy of each written agreement entered into pertaining to the account, and if requested by the customer must be furnished with a fully executed copy of each agreement. Written agreements include customer account agreements, margin agreements, option agreements, and any securities lending agreements. Each customer must be provided with a notice containing the address and telephone number of the department of the firm to which any complaints as to the account may be directed. So they actually have to tell you as part of the account, customer account information, if you have a complaint, who to contact. Broker-dealers must keep records related to this is the furnishing of the account record, so furnishing of, for the same period of time that they actually keep the account records for, so 6 years. So broker-dealers must keep records as to the furnishing of account records for 6 years. After the closing of the account, 2 years readily accessible. If the customer's account is a trust, the account record information shall be sent to the same person that gets the customer or gets the account statements for the account, which would make sense. If your customer has multiple accounts, so they have a personal account, an IRA account, a trust account, the broker-dealer can provide account-related documentation on a combined basis, so long as the customer has agreed to receive these statements on a combined basis. If spouses living at the same address have agreed to receive account information on a combined basis for their personal accounts, that would be fine as well. As far as the account record and the furnishing requirements of SEC Rule 17A-3, it only applies to accounts for which a firm is or has, within the past 36 months, been required to make a suitability determination under federal securities laws. So if suitability is part of the requirement of the firm, suitability usually has to do with making a recommendation to a customer. Then the account record information rule and the furnishing of the account record information is required. SEC Rule 17A-3 requires broker-dealers to keep records related to order tickets. The test loves for you to know what in the heck goes on in an order ticket. The order ticket includes the terms and conditions of the order, any modifications or cancellations to the order, the identity of the account for which the order was taken is on the order ticket, the identity of the associated person responsible for the account. The order ticket must describe if the order was entered subject to discretionary authority, it must be marked discretion. So if there was no discretion exercised, it does not need to be marked as such. The order ticket must identify the time the order was received, the time that it was entered, and the price at which it was executed. The order ticket must also include the time of execution or cancellation. So the order ticket has two times on it, the time the order was received and the time it was executed, the price at which it was executed. Broker-dealers must keep records as far as order tickets go for 3 years. So now we're kind of moving into some rules that have a 3-year record-keeping requirement. So 3 years, the first 2 years readily accessible. So order tickets were kept by the firm for 3 years. Associated person records. So SEC Rule 17A-3 also requires that firms maintain for each associated person a record containing the following: a list of every office where each associated person regularly conducts business, their CRD number if they have one, and every internal identification number or code assigned to that person by the broker-dealer. Broker-dealers must also keep associated person compensation records. So a record containing each purchase and sale of a security attributable to that associated person for compensation purposes, the amount of compensation for each purchase or sale if monetary, and a description of the compensation if it's non-monetary. They must also keep all agreements pertaining to the relationship between the broker-dealer and each associated person. Broker-dealers must retain compensation records for 3 years, 2 years readily accessible. So the records related to the associated person, their CRD number, their internal ID number, those records are kept for 3 years after the person left the firm. Compensation records kept for 3 years, the first 2 readily accessible. Complaint records. So under SEC Rule 17A-3, complaint records must be kept for each associated person. A record of written customer complaints received from the firm. The records must include the complainant's name, address, account number, the date the complaint was received, the name of any other associated person identified in the complaint, a description of the nature of the complaint, and the disposition of the complaint. Instead of a record, the firm may maintain a copy of each original complaint in a separate file by the associated person named in the complaint, along with a record of the disposition of the complaint. Associated person complaint records under SEC rules must be kept for 3 years, the first 2 readily accessible. Complaint records, however, under FINRA rules must be kept for 4 years. So you know that the firm's going to default and keep them for 4 years. And that has to do with the examination cycle. The longest between examinations FINRA member firms can have is a 4-year cycle. So customer complaint records under FINRA rules must be kept for 4 years. Communications supervision records. Broker-dealers must make sure there's a record documenting that the firm has complied with or adopted policies and procedures reasonably designed to establish compliance with all federal and FINRA rules as far as principal approval of communications with the public. Communications with the public must be approved by a principal, usually prior to use, but that's a different rule. Communication supervision records must be kept for 3 years, 2 years, readily accessible. Contact person records. Broker-dealers must ensure that there is a record for each office listing all individuals by name or title at the office who, without delay, can explain the types of records maintained at that office and the information that they contain. Contact person records must be kept by the broker-dealer for 6 years. The first 2 easily accessible. So that's a shift. So we had a lot of 3. Now we're back to 6. Contact person records for 6. Responsible principal records. Broker-dealers must ensure that there is a record listing each principal responsible for establishing policies and procedures reasonably designed to ensure compliance with federal laws and FINRA rules. Broker-dealers must keep records related to the responsible principal for 6 years, 2 years, readily accessible. Office records. Broker-dealers must make sure that the firm makes and keeps current as to each office certain books and records that reflect the activities of the office. This includes the office's blotters, order tickets, customer account records, customer complaints, records with respect to associated persons, records evidencing compliance with SRO rules. SRO is a self-regulatory organization regarding communications with the public, so that's FINRA's communications with the public rules. Records of persons who can explain the information that's in the records, and records of each principal responsible for establishing record-keeping compliance procedures. Office records must be kept in that office for the most recent 2-year period of time. SEC Rule 17A-4 requires records related to communications with the public. Broker-dealers must make sure that there are originals of all communications received and copies of all communications sent and any appropriate approvals thereof by the firm, including all inter-office memorandum and communications. So all of the communications sent out or inter-office related to the firm's business, including communications which are subject to FINRA rules. Broker-dealers must keep records related to communications with the public for 3 years, 2 years readily accessible. Organizational documents related to the firm. So this would be articles of incorporation, partnership articles. If they are a corporation, their minute books, their stock certificate books. All of the firm's forms that are filed, so Form BD is filed, if Form BDW is filed, all amendments, all licenses must be kept for the life of the enterprise and of any successor enterprise. So any organizational records related to that broker-dealer must be kept forever for the life of the enterprise. This is the only one that has that rule, life. Special reports. Broker-dealers must ensure that a firm has each report that a securities regulator has requested or asked that they make and furnish kept on file for 3 years after the date of the special report. Compliance, supervisory, and procedures manuals. So manuals, written documents of the firm's compliance. How are they going to comply with all the laws, the supervisory rules, their procedures, including all of the updates, revisions of the manual, policies and practices that the firm has with respect to compliance must be kept. So copies of those manuals kept for 3 years after termination of use of the manual. Exception reports. So broker-dealers must ensure that the firm has all reports produced to review for unusual activity in customers' accounts. Exception reports must be kept for 18 months after the date the report was generated. So that's the shortest. We talked about the life of the enterprise for the things like articles of organization, partnership records. For the life of the enterprise. Do you remember what the rule was for items of original entry like blotters, ledgers. How long? 6 years. So we have certain things for life. Original entry, 6 years, and then most other things are kept for 3. 2 years readily accessible for most. So practice those dates. Make yourself a chart. You've got 18 months being the shortest period of time and life of the enterprise being the longest. A lot of times students want me to make them the magic chart, but if you make it yourself, something magic happens and that's you learn it. So make yourself a chart. I promise it will help you with that information. FINRA Rule 2251, switching gears, has to do with the forwarding of proxy and other issuer-related materials. So proxy materials are something that the broker-dealer receives from the issuer must be forwarded promptly to the beneficial owner whenever the member carries the account. So let's say it's shares of Disney stock. The member shall forward all proxy material that is furnished to the member by the issuer and forward all annual reports, information statements, and other material sent to stockholders. When a carrying member forwards information like that to the shareholder, they can charge a fee for doing that. So there is a rule related to how much can they charge. There's approved rates as far as reimbursement. They can receive reimbursement for the cost of the postage, the cost of the envelopes, any actual costs, not more than the cost, but the actual costs is fine. Your customer would like to transfer their account. So we have FINRA Rule 11870, so account transfers. This is one you definitely have to know, not the number. But what is it about? Because this happens all the time. Customers transfer their accounts. Account transfer rules. Member firms have a responsibility to expedite customers' requests. So when a customer whose securities account is carried by a member and the customer wishes to transfer securities in whole or in part to another member. So here we've got the carrying member. Here's the customer. And then we have the receiving member. So Joe wants to move his securities from where they are currently being carried over here to this receiving member firm. So this is the rule as far as this process goes. Both members must, magic word, expedite and coordinate activities with respect to the transfer. So the customer is going to request that this asset be transferred. So what the form that's filled out is called a TIF, a transfer instruction form. Transfer instruction form. So broker to broker transfer instruction form. So the carrying member receives this. The carrying member must right away, within 1 business day, validate the transfer instructions to the receiving member. So the customer gives the carrying member the transfer instruction form. We have 1 business day, we being the carrying firm, 1 business day, so right away. So this is the first thing that's done, and it's done when? It's expedited right away within 1 business day to validate. Or take exception to the transfer instruction form. But generally we'll just, validate it. It'll be a transaction that can be done because those assets are with the carrying member. Now, it's possible the time frames referenced within this rule may change. So all of this is done electronically. So there's what's called the Automated Customer Account Transfer Service Facility. There's the National Securities Clearing Corporation. So the National Securities Clearing Corporation operates this ACAT system, so we commonly call it that, acronyms all over this industry, to facilitate the transfer of customer accounts from one broker-dealer to another. So it's all done electronically. Nobody actually has any more stock certificates. It's very rare. Upon validation of an instruction to transfer securities, a carrying member must freeze the account to be transferred. All open orders, with the exception of options positions that expire within 7 business days, all open orders must be canceled and no new orders can be taken, which would make sense because the customer told you that they want to transfer their assets. So the TIF has been received. So the account is frozen. Cancel all open orders. If there is an exception, you work with the receiving member to clarify what the problem is. The carrying member validates right away, promptly, within 1 business day, and then must complete the transaction. So the asset is going to move from the carrying member to the receiving member within 3, so a little bit longer, business days after validating the transfer instruction form. So transfer the asset within 3 business days of validation. So I would definitely know these numbers. Within 3 business days of validation. So this is the first thing that's done right away. Validate the transfer instruction form and then transfer the assets within 3 business days. That concludes our discussion of customer account rules and regulations. Lots of dates, lots of rules to know, practice. Read your key facts, take your final exam for this section. Good luck.